let's talk a little bit about off-market and on-market. And in today's video, I'm going to use an example to make it easier for everyone to understand. So let's use the example of a car dealership, right? Maybe you're driving your old car and you want to take it into a car dealership to get a new one, to trade in for a new one, right? And you tell them a little bit about your car, maybe the year, how many miles, whatever else, how often it was serviced, whatever. You give them the general information about your car. They take that back into the back office or whatever, and within 10 minutes, they come back with a very firm offer for the price that they will pay you for your car. And this offer is usually just high enough that you will want to take a bite at it, right? You think it's worth considering, but it's also low enough that they have a very comfortable margin baked in to the resale value of that car. And how are they able to do that? They're able to do that because they have a lot of data, right? They have a lot of information about the value of the car based on the year, the mileage, and so on, right? And basically that is the same thing that we do in commercial real estate, right? We use data. And this is our exact playbook. We underwrite and then we make offers based on the property's current net operating income, right? Of course, we're going to look at the so-called projected or pro forma numbers as well. And we're going to figure out what we think we can get the rents up to. If we renovate the units to this level, how much can we boost the rents? We're going to look at many different things that in that specific market, right? And according to specific properties nearby to kind of predict what kinds of rents we can get. And we always stick to a very conservative approach. But anyway, this tells us the true value of the investment. So when we find a motivated seller, right, we can crunch our numbers, we can make a very compelling offer, maybe slightly below the so-called value of the property, and we can build in some equity from the moment we close. Therefore, the profit is engineered upfront, not hoped for later, right? In real estate, you will constantly hear people say, you make money when you buy. You make money when you buy. You make money when you buy. And that is absolutely true. You have to buy the deals in the right way for the right price in order to make the money. If you buy a deal and you overprice, you overbid, whatever, but no matter how good your asset management, no matter how good your business plan is, you're going to be struggling from day one. Right, so if the idea of building returns into the purchase price appeals to you or it makes sense to you, let's talk. See you in the next video. Haven't joined yet? Our free investing group gives you front row access to new deals and helpful investing education. Sign up today.